if the markets show signs of interpreting bad news as good news, I probably want to go ahead and start deploying some of that cash in the near term. I'm not talking, next year or something, but, in the months immediately ahead. And right now, it's with gold over 3,300, it's hard to find what I would call a legitimate bargain, an overlooked gem. If you've got a gold stock that hasn't budged at all and gold's gone up and the gold stock hasn't, but there's probably something wrong with that story. There's a reason why that stock hasn't moved. But if I could find one that I thought was the real deal, overlooked gem somehow.
Gold is hitting records in more ways than one. Gold also notched a new record price on an inflation-adjusted basis, surpassing the long-standing record set in 1980. The market share for gold mining ETFs is even lower, representing less than 0.5% of total equity ETFs. That's a shame because gold stocks have been among the year's best bets so far. The NYSE Arca Gold Miners Index, or GDM, has advanced roughly 50% through Thursday's close, far outperforming the S&P 500, which has lost close to 10% over the same period. Prominent natural resource investor Lobo Tiggre sees any sharp drop in gold or miners during a broader crash as a brief window to buy. While Tiggre is cautious with gold above $3,300, he's ready to go all in if a real overlooked gem appears. Historically, gold mining stocks amplify gold's movements by 2 to 3 times due to their operational leverage. However, during this current gold upleg, GDX has achieved only 1.2x leverage, 91.8% gain, compared to gold's move. Under normal market conditions, gold stocks should have soared 156% to 233% during this period based on historical relationships. The good news for investors is that this disconnect is resolving. Year-to-date in 2025, gold stocks have finally shown more typical leverage, with GDX gaining 48.9% compared to gold's 23.1%, a healthier 2.1x multiplier effect. Drawing from his experience during the 2008 crash, Tiggre recalls putting out a shopping list of gold stocks only to find many had already rebounded by the time he was ready to buy. In a major crash, Tiggre warns that even gold could face short-term selling due to margin calls, not weakness. According to him, in such moments, liquidity rules are not fundamentals. This gold rally is a classic fear trade. Investor sentiment has collapsed to its lowest level in 3 decades, according to April's Bank of America Global Fund Manager survey. 82% of participants said the global economy will shrink, marking the most pessimistic reading in the survey's history. Before discussing Lobo Tiggre's sharp insights from his latest interview, hit the subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
What we saw in the last week or two, that was just I think a relatively minor fluctuation. Gold corrected, $100 or something from top to bottom. That was not a big deal. Not when you're close to 3,000, right? At $500 gold, $100 correction would have been a pretty darn big deal. Not where we are now. If we get an actual crash, yes, I have no doubt, even if it would seem to be that's when gold should shine and soar as a safe haven value, liquidity doesn't care. The margin call doesn't care. When the margin clerk is selling your stocks for you, he doesn't care or she doesn't care, right? So yes, if we get an actual crash, yes, I do think everything gets whacked, including gold, which is actually one reason to accumulate cash, because I was able to buy, but not just stocks. We always tell readers first, and that was even true back in my Casey's days before doing our own money in the market. And I put out a shopping list. I kid you not, I researched it in November of 2008, and I published it at the beginning of December 2008. And by the time I was able to buy those stocks, the gold had already pulled a V-shaped bottom. And if you recall, gold actually ended the year in the black in 2008. And that happened in that December. And so by the time I was able to buy, the stocks were already up. I didn't want to chase them. Markets had been going down, right? And by the end of December, they're like doubled or something. So anyway, the point of the story is, I want to have cash and I want to be liquid and I want to be ready to deploy should we be so lucky as to get that opportunity. Because absolutely no question in my mind at all, Elijah, if there's a broader market cap crash and it affects gold, silver, and the stocks, that will be very brief. And that will be something that I would want to buy with both paws or all four. But I'm not sure that that's going to happen. If the Powell put, there could be a Trump put. We'll see. If the markets show signs of interpreting bad news as good news, I probably want to go ahead and start deploying some of that cash in the near term. I'm not talking, next year or something, but, in the months immediately ahead. And right now, it's with gold over 3,300, it's hard to find it what I would call a legitimate bargain, an overlooked gem. If you've got a gold stock that hasn't budged at all and gold's gone up and the gold stock hasn't, but there's probably something wrong with that story. I mean, there's a reason why that stock hasn't moved. But if I could find one that I thought was the real deal, overlooked gem somehow, I think that on the one, I was going to say hand, but we'll have paws. So on one paw, the stagflation is going to remind everybody of the 1970s. And I'm sure that feeds into gold, or, gold and silver, because everybody remembers what happened in the 1970s. But there's no law of economics that says that every stagflationary event will be similar or that they're all the same. I mean, this clearly is quite different. I mean, you could say, oh, well, we had oil shock in the 1970s. Now we have Trump shock now. But they're very different things. I mean, oil shock was a price shock on an important economic input. Trump shock is Trump trying to, for better or for worse, I mean, even if you agree with him, I think you'll agree with me that what he's doing is attempting major surgery on the entire global economic order to put America first, as he says. Agree with that or disagree with that. That is a huge thing that is shocking to the system, and it will have powerful repercussions for years to come. That would happen if he stopped today. Just upsetting the apple cart as he has done has already unleashed all kinds of uncertainty, and it has all kinds of players on the international stage, looking to reroute, rewire, or at the very least back up their systems so as not to rely so much on the U.S. anymore. So this is very different from what happened before. But what else are people going to compare to? So without giving you specific targets, I'll be happy if I'm right about the general outline of we still have highly inflationary trends in place. And then we also have We had signs of economic weakness before. You and I have talked about them for years. They never produced an official recession, arguably a rolling recession. And now we may get a recession, even if it's short-lived because of Trump shock. So I think it's reasonable for people to, or rather, lacking any others, North Star to guide by. And even if the charts are broken because we're in uncharted waters, people are going to remember what happened in the 70s. So I think that's relevant. But I do think it's dangerous to assume that things will look just like the 70s. Circumstances are very different, and particularly for, our favorite monetary metal, gold. I mean, I guess I shouldn't presume that you may love silver more than gold. I don't know what your personal preference is there, Elijah. But as money right now, gold takes the prize in my view. And we have to remember that in the 1970s situation, gold was coming off of price control, right? Gold, the dollar was defined as a certain amount of gold, and that went away when Richard Nixon closed the gold window in 1971. That's not the case now. And we're going into this situation. Well, okay, it's over 3,300 now as you and I speak, but it was, I forget where it was, on January 20, whatever, but it was in the high 2000s. So you can't really say that we were starting at, this price control level that was artificially low. You could say it's artificially low, but not like that. So it's a very different circumstance.
A growing chorus of Wall Street firms and analysts increasingly foresee the U.S. economy entering a recession, something real-time measures of gross domestic product, GDP, are also showing. Seasoned expert Lobo Tiggre expresses caution, noting past crash warnings often proved premature. While he sees a real risk of a 2020 or 2008-style downturn, he doubts a 1929-level collapse due to likely central bank intervention. Still, he warns that major shifts, like a Trump shock or financial system overhaul, could trigger serious economic turmoil. In referring to the slowing economy, Trump may be becoming more attuned to the negative shock his tariff strategy is creating to growth. In a note to clients Monday, analysts with Evercore ISI Financial Group warned Trump was risking a global buyer strike from bond investors, which could send bond yields even higher if the president fails to meaningfully control the deficit. Moreover, Tiggre urges caution, suggesting that building cash reserves is wise in any scenario. He cites Warren Buffett's strategy as proof that holding cash is never a losing move. Let's get back to the interview.
The anarchist in me keeps on seeing the next, recession and the next market crash around the corner. The, silver-beard speculator in me, like every time I've been sure that was coming, I've been wrong, except for once. And twice. I was sure the markets were going to take it on the chin in 2020 and then 2008. But every other year that hasn't happened. There's been reasons to think, man, this can't go on, right? So I'm very reluctant to say that, So I do not want to tell the audience that, hey, we've already had our crash and that's it. It's safe. That absolutely I won't say. I don't want to be the one saying, yes, the market is, we're going to have an official, I don't want to mince words here. The odds are not just non-zero. The odds are not just, some vague possibility. I think there is substantial risk of at least a 2020, if not 2008 scale event here. I don't think a 1929 level event is in the cards because I think the powers that be will flood the world with as much money as it takes to reflate, which was not done back then when you had to back your money with gold. So I don't see something as protracted as that. But I do think that there is a very substantial still chance ahead of us of that, much more pain to come. I mean, don't underestimate Trump shock. You cannot rewire the entire global financial system and expect, just a few mild corrections along the way, or even just sort of flirting with a bear market for a day on the S&P 500, right? That's nowhere near the kind of pain that actually succeeding at changing the global financial order would cause along the way. That said, we have years and years of the Fed training investors that if there's trouble, will come to the rescue. Some Fed, I'm not sure if there are voting members or not this year, but various different Fed spokespersons have said recently that, of course, if there's systemic risk, the Fed is ready to come in to the rescue. The markets know that. Again, I'm not being very helpful. I wish I could say, Elijah, this is what will happen, right? But the thing is, I have to be right if I say that. There's an either-or option here. I cannot tell you, and I wouldn't believe anybody who did tell you they knew exactly which it would be. I can tell you that not just, saving in bullion, because, we know that, everybody knows that, but accumulating cash in a circumstance like this is not a mistake. Let's say the bottom is in, right? And just, Trump shock, the worst has come, Trump's walked back his reciprocal tariffs. All these deals are made and announced soon, and we all, hug and kiss and sing kumbaya, and it's all happy, happy, joy, joy from here, somehow, except for China. We'll ignore China. Somehow that doesn't matter anymore. Yeah, everything's fine. If that happens, we're looking at a multi-year bull market. Remember the Congress, the conservative fiscal hawks in Congress have just voted to lift the debt ceiling for years. All right, trillions and trillions. This is highly inflationary. So there are literally years ahead to make money if we are cautious now. You don't have to race to get ahead of this. You don't have to time the market. You can't go broke accumulating cash. I mean, just look at what Warren Buffett does. And I know a lot of gold bugs don't like Warren Buffett because of the pet rock remarks and so on. But he knows how to make money in the markets. And what's his portfolio doing? It's going like this to cash. Sorry. It's the cash component is literally going vertical in Buffett's portfolio. Like Doug Casey calls him an idiot savant. So even if you don't like him, he does have that savant component going in the markets, and you ignore that at your own peril. So I'm personally accumulating cash, and I have a short list. We've talked about things that I'm looking forward to buying in the turmoil that I get ahead. And what I'm saying is you won't go broke collecting cash. If we do get a market crash or even just more volatility, more correction, a bear market without a crash, but just still more weakness, you'll be happy to have that cash to deploy in that market. And if not, well, okay, we missed the bottom, but we still have the cash and we can still participate in what will be, I think, years of opportunities ahead.
Goldman Sachs sees gold topping out at $3,700 by the end of this year and $4,000 an ounce by mid-2026. Just as investors' portfolios are underexposed to the yellow metal, gold mining stocks look incredibly undervalued compared to the market. With gold stocks regaining strength and economic uncertainty mounting, are you building your own shopping list, ready to strike when the moment comes? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.